Hey everyone, in this video, I'm going to focus on one reason to buy Amazon stock right now, and that reason is going to focus on profitability. So I'm going to share with you its investments and the areas that are driving Amazon's profit, and share with you the longer term expansion in operating profit margin that Amazon has delivered for investors. So let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Right, so one of Amazon's more profitable initiatives has been the advertising segment, and Amazon's advertising progress management said remained strong in 2023. This is fiscal year 2023, which grew 24% year over year from $38 billion in 2022 up to $47 billion in 2023. And this was primarily driven by their sponsored advertisements. By the way, this document I'm looking at is Amazon's shareholder letter. So if you want to follow along, that's the document I'm looking at. You can find it on Amazon's investor relations website. So back to Amazon's advertising business, 24% growth up to $47 billion in 2023. That's now reaching large scale. You're now approaching 50 billion. If you grow at this rate, you'll soon be in the 100 billion range. And advertising is a profitable business. It's a lucrative business. If you look at some of the other companies at larger scale, like Meta Platforms and Alphabet, and look at the operating profit margins they generate, it's much, much higher than Amazon's overall operating profit margin. So this business segment is on the higher end of all of Amazon's business segments in terms of profitability. The faster this segment grows, the more Amazon's operating profit margin will trend higher. And this segment is likely to continue growing. Now, recently, they've expanded their streaming TV advertising by introducing ads into Prime Video shows and movies, where brands reach over 200 million monthly viewers. Now, previously, Amazon Prime Video was just included as part of your Amazon Prime membership in most parts of the world. So just a free inclusion into your Amazon Prime membership. Now, what they've done is they've now included advertising into that Prime Video offering. And the per user advertising fees that Amazon can generate ranges in the several dollars per user, right? So per month. So they can, if you look at comparative streaming ad-supported services, it's not surprising to generate $5, $6, $7, $8 per month in ad revenue per user. So that's significant revenue coming for Amazon from this advertising that they just included in Prime memberships. So that's a nice supplemental revenue stream from Amazon, where previously it was just a free thing they were giving customers. So businesses would be interested in this service, because if you're already on Amazon and you're already selling products on Amazon and you're already buying advertising on the website, it won't take much more effort to now buy advertising on Prime Video. You're already on the platform. You've already got your payment information, relationships with Amazon Business, and you just add this as part of your purchase, as part of your offering. And you know that the customers you're advertising to, they have an account on Amazon where you're selling your products, and they have their payment information on file. So if they see an advertisement for your product that they like, it's more likely to turn into a sale versus, let's say, if you're buying advertising on YouTube or if you're buying advertising on Meta Platforms, you don't know if those people have an account on Amazon where you're selling your product, if that's the only place you're selling your product. So that's one segment that's driving profitable expansion for Amazon. And you can see longer term, Amazon's operating profit margin over the last decade, look at that nice trend higher. Of course, there's volatility, ups and downs, but longer term, it's increasing from roughly 1% in 2015 all the way up to 8% in the trailing 12-month period. This is economies in scale for a business, and it's a great demonstration of economies in scale as Amazon has grown, not just in revenue, but in customer count. They've utilized that scale, the number of customers, the number of sales, the number of views, the number of clicks, all of that, they've benefited, they've capitalized on it to drive increasing profitability. Every year, their profit margin seems to be expanding if you look backwards, right? In the medium term, in the short term, there's moments where it falls, but longer term, it's rising. So one of the other areas, of course, is AWS, where in 2023, businesses were doing some cost optimizing. They were looking to AWS as an area where they could cut some cost because they noticed that there is potentially a recession coming. The Federal Reserve had just increased interest rates, so businesses were afraid. They were trying to save money. But Amazon says by the end of 2023, they saw an end to those cost optimization efforts. New deals started accelerating, customers were renewing contracts longer term, and migrations were growing again. So that drove growth for AWS, and you can notice that in their results. I'll share with you here, year-over-year growth for AWS. You can see it declining. You can see that cost optimization where growth went from 20 to 16 to 12%. And then it started accelerating in the last 2 quarters from 12% to 13% growth, and then to 17% growth. And then the operating profit margin for the AWS segment is much higher than the rest of the business, 37.6% in the latest quarter. It's roughly been above 24% for the last few years. And consider this operating profit margin between 24 and 38%, and compare it to Amazon's overall operating profit margin of 8%. And you can realize the importance of the growth of AWS and how it lifts Amazon's profit margin longer term. And so that's great news that AWS is accelerating again, and management saying that will continue. Now, another area of growth that's driving profit is Amazon's chip endeavors, right? They announced next generation of generalized CPU chips, the Graviton 4, which provides 30% better compute performance and 75% more memory bandwidth than its already leading predecessor, the Graviton 3. They also announced AWS Trainium chips, which will deliver up to 4 times faster machine learning training for generative AI applications and 3 times more memory capacity than the predecessor Trainium 1. And demand for GPUs and CPUs for artificial intelligence has been off the charts. Demand, in fact, exceeds supply for NVIDIA. And so there's room for Amazon to step in and say, look, if you can't get your hands on NVIDIA GPUs and you want to access generative AI training, we've got our own chips here you can access. Of course, they're not as good as NVIDIA, but they're more affordable, and it's an option. You don't have the option of NVIDIA. And so this too is driving growth for Amazon and Amazon's profitability as the increase in demand for training and inferencing artificial intelligence models really boosts spending from enterprises. So all of these are working to enhance Amazon's profitability longer term, and its valuation, even though the stock price has increased to $182 per share, the valuation is still relatively cheap, trading at a forward price to earnings of 31.9. So this is just one reason. Of course, there's plenty, but I just wanted to highlight one reason to buy Amazon stock right now. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.